So throughout history, money's really evolved, and the some of the biggest evolutions have come with the digital transformation, in particular the introduction of blockchain and cryptocurrencies. And it's causing a rethink of what the future monetary system should be, and how do all these technologies play a role, and how do we actually do the things that we're trying to do to serve the broad base. So I want to share with you the views from the Bank of International Settlements, which is the central banker's banker. They work with all the central banks around the world. They do excellent research, and they've been following, looking at central bank digital currencies going back to 2018. And actually, back in August of 2020, I did a briefing on their report when crypto was really taking off inside the community. And I shared some of the views that they have. And I would just start by saying I am the furthest thing from an expert on crypto. Bill's tried to explain it to me. And my understanding of crypto is like the guy who still has his VCR flashing 12 o'clock. So, but I do understand the monetary system and how it works. And I would just say that the BIS felt there was a number of issues that were holding it back from crypto from being broadly applied in the monetary system, and they're listed here. And obviously some of them have revealed to be true, the design flaws, some of the lack of stability. I think the illegal activities one is a little bit overdone, because you can do a lot of illegal activities with cash. So I don't think that they're really bring it to bear. But I do think there were some challenges with crypto, and that in the last couple of months, some of those challenges have come to light. But at the same time, and back in that same presentation back in 2020, I shared what Lyle Brainerd, who's now a vice chair at the Federal Reserve, said what the opportunities and some of her concerns were. And some of the concerns are actually stuff that can be solved for in a different structure. So I think they're legitimate views on both sides. I would just ask that as we go through this, what the BIS is suggesting, that the true believers and the non-believers actually just take an open mind to what the BIS is suggesting how the future money could work, because I think we're at a crossroads where you need to have a sound monetary system that has a couple elements. It has to have trust, it has to have security, it has to have a decentralization so that it can reach more people than we have. We've not been as inclusive as we need to, and it has to be scalable. And I think when you put them all together, it highlights some of the challenges with the current system and future system. So in the report, and we're going to put this report into the chat room at the end so you can read it and draw your own conclusions and see where I got it wrong. But the BIS said there's basically 8 key high-level goals that you want to have for a monetary system: safety and stability, accountability, efficiency, inclusion, user control over data, so privacy, integrity, adaptability, and openness. And the first column with the green and the yellow right here is highlighting that current monetary system is really good on safety and stability, but lacking in 7 of the 8 areas. In the crypto universe, it has a red light on 4 of the 8 areas and a yellow on 2 of them. So it's lacking, but it is very strong in 2, adaptability and openness. So the idea for the BIS is to take the best of both worlds, bring them together to have a system that serves the problems and concerns of both sides, controlling the monetary system in a way that allows you to deal with crises and keep the trust in the system, and at the same time get to deal with the current problems of the current system, which is the lack of access for a lot of people, and the unfairness of the access and how it flows through, but also some of the risks and transparency. So this is a pretty cool setup, the way they describe this. So you'll be able to see this in the deck when we send that around. Fascinating how much the rise of cryptocurrencies have been and how fast they've moved up, particularly in the last couple of years. But with the rise, you've had a big rise in market value. And as we know, this year, a big fall in market value. And a lot of the people who got in this move up for over the last year are now underwater. So that's going to create some challenges in the system as well. The other challenge, I think, that really hits the trust and confidence in the crypto system was when stable coins revealed to be not so stable, and you had significant losses incurred there. And you can see how it flowed through to Terra and Tether. and you can see the outflows and the losses. And part of the reason for that, I'll get to in 1 minute, but one of the challenges I think that the Bank of International Settlements is also focused on is, as the bridges increase, it increases the vulnerabilities of the system across the blockchains, and that's led to an increase in theft. And as you can see from the two charts side by side, how they've matched these up. So, on that, so I apologize. The other interesting thing is what retail flows have done. And as you can see, when retail jumped in, it was well part following the price move. So not dissimilar to their behavior in the equity markets. And when index funds are rising, they all jump in. And when index funds go down, they all jump out. Similar behavior happened here. But one of the key reasons for that, I think, gets into the makeup of who is buying in the retail space. And it was 1/3 of the buyers were males under age 35, who tend to be higher risk takers than most people. And that actually creates an interesting dynamic, and I think adds an element of volatility to the system. I think one of the big challenges with the system, and one of the big concerns for the central banks across the world, is that one of the fundamental challenges of the systems is when you get higher volumes, you don't get lower costs, you actually get higher costs. In the crypto world, where in the banking system, you should get lower costs with higher volumes. And that conflict has to be resolved. And I think that what they're trying to show in this chart is the conflict between centralized and decentralized, what it does in terms of volume and cost. So it's just one of the key areas that the Bank of International Settlements views as a flaw of the current crypto system. So what do they think the world should look like? Well, obviously, if you're a central banker, the central bank's banker, you think it should all start with the central banks at the core, and then work through the system as it works today, but pull together kind of the best of all the worlds and all the technologies that come out. Because beyond crypto, you have some really interesting DeFi technologies that need to be incorporated into the global system too, that get to who owns the risk and how is the risk mitigated and controlled. And I think one of the concerns about the current crypto world is you have so much private exposure, where the confidence in the markets really comes from the backing of governments, which is, I think, the fundamental conflict between crypto and the monetary system today. So how do we resolve that conflict and get it to a closer setup? And the way that the BIS is suggesting is you take the best of both worlds. You use wholesale central bank digital, the big cross-border transactions on high-level volumes. You come up with fast retail payment systems like you're seeing. The guys in Brazil know the PIX system and other systems that are really creating new ways for the unbanked to be better banked. And then you look at bringing some of the new elements of new technologies and tokenization and combine it with some of the safety and security of the real old world. And I'm just reminded, as we're talking about the future of finance, Rogers went down in Canada pretty aggressively. It would be like Verizon or AT&T going out in the US, and it shut down their internet for a couple of hours or days. I'm not sure the length of time, but it's a reminder that cash still matters in our banking system too, because when the lights go out, you can still buy things with cash. So we're in a very different world that is evolving very fast, and how you combine these elements, I think it's going to be a fascinating thing to look at going forward. But I think this conflict that we've had of, crypto against the monetary system is going to be shifting to crypto as part of the monetary system, and a much more efficient and better system with higher trust and better services. So the key takeaways from the report, I think, are creative innovations driving a lot of changes in how money and payments operate. We're going to have to adapt to that very quickly. The view that the current crypto universe is not as stable as it needs to be a basis for a monetary system, I think, has come to light over the last couple of months. Others may disagree, but I think there's a case to be made based on the movements, and particularly this lack of stability in the stable coins. I think a combination of the innovation that's coming, particularly with blockchain and others providing much greater efficiencies, combined with some of the tried and true foundational use that central banks bring to deal with difficult economies, recessions, and inflation, I think are important elements to keep the best of both worlds. But we have to get better at operating cross borders in a world, and you have to have a system that has high confidence and trust and can continue to adapt, because the world's only going to continue to innovate and move much faster. So I think this is where the world is going. I don't think it's going to get there very quickly. I think this is going to be an evolutionary process, but things happen very slow at first, and then all of a sudden they accelerate very quickly. And I think we may see that here as a clash of kind of civilizations, from old banking to the new DeFi world, collide and create a new system that is going to could be one that's much better for the world to operate in. So I'm going to stop there, Mark, and open up for people's thoughts and comments.
I think what's really incredible is some of this appreciated is that you've been talking about this off and on, and everybody, you can go back to that slide you shared from the August briefing. That was our briefing that you did, right? And it's all on YouTube. And it's interesting but I think the interesting part of this report is that they see silver linings, not just concerns.
Yeah, when I raised it the last time, I got booed out. I remember by the believers, because they didn't buy the fact that you couldn't make a retail transaction. I think somebody referenced buying a motorcycle, which is a lot different than buying a pack of gum. So I think that the system is evolving, and we're really learning how we're going to coexist. And I think that's going to be a fascinating evolution that we're going to go through in the next couple of years.
Stephen, how far along are the central banks or the Fed on developing their own cryptocurrencies? It's still not clear to me.
It's not clear to anybody. And I think they're different all over. They're all at different speeds. And I think it really gets to how disruptive is it to your banking system, or is it additive? I think there are a lot of countries that adding this type of technology is completely additive. In more advanced economies, I think it's much more disruptive, because you have to figure out how it marries to the current system better. I think that's kind of the tension that we're going through.
And is it with the intent of fending off the onslaught of all these other cryptocurrencies to retain control over the system? Are they threatened by this in a major way?
I think they're worried about the lack of stability that would come, the destabilization of the current monetary system, which is already going through a lot of destabilization because of the war and the pandemic and the amount of stimulus we've put in. And you're seeing it right now, like what happens with the vulnerability that we're at right now for the global economy. Who do you count on to help regulate the way out of it? And I think that's one of the issues. I don't think it's as much the command and control of wanting to own how money flows as much as it is being able to regulate the economy and help the economy through the difficult times.
A slightly different take on that. I do think that there is a threat, and it's ending in the way that it should have ended, right? Because in the past we've made comments, countries go to war to protect the ability to issue sovereign currency, and so this is something that governments need to preserve, and there's also an element of surveillance. So, and to Andrew's question, China has a digital renminbi, of which they've already handed out pilot cases of 50,000 renminbi to certain people, and are monitoring how that's flowing through the system right now, uses and payments and et cetera, but it has a very, very large element of surveillance. So the thing that needs to be solved in terms of crypto is this going to be further invasive to privacy, right? So cash is disappearing, but there's still the ability to do things in cash. When you go away from that, then let's say the next stimulus check to people is going to be a digital debit into their credit into their digital wallets or digital accounts, but it may come with conditions such as you can't spend this digital currency on cigarettes. And therefore, or if you become a bad citizen, as in China, where you have a bad social credit score, you can't use your digital currency at all, and we're locking you out. You become a pariah of society. So there's a bunch of issues, I think, that still need to be figured out.
Yeah, yeah, Greg, spot on. Stephen, that was really good. That was really good. Especially like the chart on page 13. So yeah, I think that the efficiencies that the digital process affords are tremendous and would be, very beneficial for the entire monetary system. But as Greg points out, there are some very dark aspects to a sovereign digital currency. I've mentioned it before, and realistically, just because of the nature of the beast, you would essentially give up privacy and freedom if you decided to go with a digital currency, simply because digital currency is programmable money, and the micro monetary policy aspects of that are really tremendous, as he was pointing out. But there's a flip side to it that are also very troubling. I put a link in the chat to the Hamilton project, which is the U.S. digital currency project that's being done by MIT and the Federal Reserve of Boston. So you can take a look at that. And indeed, yeah, China's got one. There are two Caribbean, the Bahamas, and also the Eastern Caribbean region, economic region, has a digital currency, and there's like all kinds of pilots all over the place.
El Salvador has one, don't they, Bill?
Yeah. Yes.
Well,
yes.
Bill, you did a presentation on sovereign digital currencies for us. I don't know if that was in our PCI session or the general session, but maybe we could share some of that.
Yeah.
Address
Yeah.
that.
Bill, I think the interesting thing from the report, and I get lost on some of this, to be honest with you, because my understanding of crypto is not as great as others. But I think what the BIS felt was that there is something in between the kind of the retail crypto that's a central bank one, and using the payment service systems that are out there that are actually much more efficient and much better for transactional business anyway, that they think there's a better tie-in to that. I think the other thing that was a concern about the crypto universe was the who owns the risk and who's backing some of these things. And I think the Terra and the Luna issues really created a challenge in terms of confidence. And I think that as you move forward, when you're in a system, you need to have confidence in a financial system working, and that's the foundation for the system to work. And I think that's one of the challenges that the marriage of the two is going to have to resolve for his trust.
Right. Yeah. I clearly the quality control on some of the manufacturing of these things left a little bit to be desired, under stress. And, I unfortunately, we're just seeing that everything is so new. And I think that a lot of the projects that have been undertaken have taken the philosophy of, let's move super fast and try to break stuff. Well, guess what? It did break. So there's a lot to be done in terms of ensuring on the stable coins. It's like, absolutely, if you're putting out a stable coin, there is absolutely no reason, if it's properly backed, that it should break its peg. But if it's not properly backed, then you're going to have those kinds of issues. So,
and I think that backing issue is one of the big concerns that the central bank, that the BIS highlighted, is that, and when people lost a lot of money in that, who do they go for recourse? And that's why we have FDIC insurance and SIPC and all that. And when I started in Dreyfus in 1981, and the money markets were 21% rates on them, and people were afraid to give their money because it wasn't FDIC insured, to get a 21% money market rate now, which is, it's how different the world is, and that they'll throw money into crypto and without any sense of who's behind it. It's really fascinating how far we've come in 40 years. But I think when you get a crisis, which if you were in Luna or Terra or lost your money in Tether, you would have a view that it was a crisis. When you get into those, I think that impacts the confidence, and that will have an impact, and it will create regulators to get more involved as well. And I think that's the other rub that's coming, is how do you regulate this in a way that makes sense?
right.
I've always been skeptical of, as everybody knows, of some parts of this, the whole store value thing, but I like the efficiencies, the plumbing. I'm so fed up with big banks right now. Just no service, just, they're elephants that don't dance. But What's interesting, that I think is that sense of optimism. Let's go with, like, I think, but the regulation is gonna have to go to a 3.0. And I just don't know where people have any insights into where that's going as well.
Quick addition, is there a concurrent problem with or issue with energy consumption when it comes to mining cryptos? Is that, I mean,
Well,
to square
Tyler Wood,
earlier,
I see Tyler Wood put his hand up because you mentioned that in Naples.
It's
were
absolutely
throwing-
horrible. Not only is it horrible from the standpoint of energy usage, especially with NFTs. I mean, like, you have to plant like 3.5 trees for every NFT, just for the neutrality of it. But from the electronic waste, the allocation of resources, it's absolutely going in the wrong direction. I mean, I may be speaking a little too far into the future, but we already have a currency since the 70s that's been backed by hydrocarbons. Maybe we should, back our currency by biocarbons. At least we know that those are real, because crypto is speculative at best. And Stephen got into we got a discussion in Naples, in that we're going into a increasing interest rate environment, and that speculative assets get, chopped at the knees, and productive assets shine, and that we're going to be seeing that in the coming, more and more so. And I don't think the crypto winter is far from over. So
Tyler, just as a point of reference, I've got friends that mine their own currencies. So on a percentage basis, the guy at his house who's mining for cryptos, how much of a bump in energy is he using just on average? I mean, what are we talking about?
I mean, I don't know on a unit by unit basis, but collectively we're talking about like the entire energy production and usage of like the country of Chile.
Tyler, do you have a report on that you could share backing up?
It's somewhere. It's in the internet. Of like a zillion articles I read on it. Actually, there is
I can confirm, I don't have the data to hand also, but I can confirm that it is somewhere around the usage of a country such as Argentina or Chile. And I've seen in other presentations, data confirming that.
Yeah.
But isn't
Thanks, Mike.
the energy consumption a function of the validation of the coin, be it proof of stake or?
Right.
So
Is
the-
it-
Well, blockchain itself is somewhat inefficient from a transaction per second standpoint of constant revalidation. There's other operating systems of ledgers that are far more efficient that, can handle up to 500,000 transactions per second.
And that's because they're using proof of stake.
Okay,
And
but
that-
even 500,000 transactions per second, compare that to the number of transactions going across, for
Visa.
example, Visa, their network.
Yeah.
The scale is not there. And I'll also jump in and I'll say, when we look at the history of digital currencies, and notice I'm saying digital currencies, not cryptocurrencies. If we go back to the 90s and we look at, for example, DigiCash, the US and other countries are very concerned about monetary flows. If we look at when Mexico had their currency crisis, one of the issues was the ease with which people were able to privately transfer currency out of the country. So those are the sorts of concerns that nation states have. And I think we're going to continue to see that tension. And as far as thefts and illegal activities, 3 weeks or so ago, I was at NCFTA, the National Cyber Forensics and Training Alliance, which is a public-private organization involving U.S. government law enforcement, so FBI, Secret Service, postal inspectors, all those three-letter agencies and private sector participants. They're tracking people, what goes in and out of wallets. They may not know the name of who owns the wallets, but they are building up models of the relationships of who's transferring money to whom, and they're able to track that sort of stuff. So it's really interesting times. And it's kind of like the internet back in when it was first exploding in the 90s. There's a lot more to it, and there's a lot less to it than people are claiming. And it's going to take time to sort out.